All right, guys. Good morning. Hope you guys are doing well today. It is Monday. Today we got the Apple event going on. I don't know if I'm going to stream it or not. I'm probably not going to. But Nvidia has been falling down massively on Friday. It's all the way down to, it hit $100 a share, or under 101 at least, not quite 100. It's at 104s now, gapping up a little bit after big drops yesterday. The SPY is actually pretty green yesterday, but the SPY had a pretty red day overall last week as well. If we look at a lot of this stuff, you know, I'm looking at gold. Gold pulled back some Friday even as well here, so a lot of stuff dipping. What's up, Steve, Freddie, OP, Justin? Good morning. All right, I'm gonna do a poll. Does Nvidia and the stock market rebound today? Vote on the poll. Let me know how you feel. All right. So yeah, it's CPI week. It's a massive week this week, honestly. Wednesday, Thursday are big. Aside from that, it's actually kind of slow. We don't really have much else going on. All right. Don't we have some earnings? I know we had GameStop earnings this week. Tomorrow, I think, is when GameStop earnings are. Nothing really today, though. Oracle earnings this evening, so that's probably the biggest stock today. GameStop tomorrow after close. We'll stream it. We'll cover that. I'm guessing they're not doing another earnings call. They haven't done an earnings call in like a year. So we also have Petco's, David Buster's. All right. What's up, Beach? Yeah, you can look at the SPY. SPY is actually up a significant amount. There's no real reason for Nvidia to go so low. Should get back up. Yeah, I mean, I think it'll probably rebound. Who knows though? I mean, it might not. You don't never know really. But it looks okay for me. So again, today and tomorrow is pretty boring, man. Like we don't have any. I mean, GameStop earnings are tomorrow evening, and that's big. And again, we'll stream that. Wednesday is when the big stuff starts, but it's kind of slow before that. So. Let me pull Discord up. I know some stuff happened Friday. Let me get AI out. And this is how I'm using AI, such a huge part of my life, right? Because I can ask AI stuff. Weak jobs report highlighted concerns about the economy. Report showed weaker than expected employment data. Spurred worries that the economy might be slowing down more than anticipated, led to broad sell-offs, particularly in tech. Nasdaq experiencing its worst week last week since early 2022. Investors' uncertainty about the Fed's upcoming decision regarding rate cuts. Yeah, I mean that's not the biggest report. The Michigan consumer sentiment data that drops pretty much weekly, I think, but it's not the biggest report. Next week is actually a busier week in all, you know. So like next week we've got retail sales data Tuesday, FOMC rate decision Wednesday, jobless claims Philly Fed index Thursday. So I mean we got like a bunch of stuff coming out really. And then I think the week after that we got like PCE data. So CPI week's busy this week. You know, it's interesting, like, it was once, like, the largest stream we would ever do here. Yeah, so the Fed decision is going to be, it's not going to be the 11th. The 11th is the day after tomorrow. That's not when it is. The Fed decision is September 18th on Wednesday. So not the day after tomorrow, but the week after that. So it's like a week and a half later. So yeah, In your opinion, what should we expect from CPI data? I don't know. So CPI tomorrow, or the day after tomorrow, is expected at 2.6%. It's actually expected to decrease. Like last time it was 2.9%. The Fed's goal is 2%, right? So CPI on Wednesday is a pretty important day. It's expected at 2.6%. Now, the month-over-month reading is expected to stay the same at 0.2% growth in inflation month to month. But core CPI expected at 3.2%. So core excludes food and energy. And so that drops as well. Regular one is usually the more important one. But I would say CPI 0.2%, core CPI 0.2%, regular month to month. And then year to year, regular CPI expected to dip a decent amount from 2.9 to 2.6%. Okay. I can't tell if you're spamming. So just, I can't tell what you're spamming or if you're spamming. Looks like you kind of are. So, time out, sir. Sit in the corner and think about what you've done. Alright, guys. Yeah, so gold going back up. Again, Nvidia back up there, too. It's at 104. It's the SPY at 544. So we already got 200 people here. 66% of people saying yes, the market rebounds today. 34% think no. I tend to think we do, although it's never guaranteed. Like, I really don't know what's going to happen. We also had some stuff. So Big Lots filing for bankruptcy as part of the deal to be acquired by Nexus Capital Management. So Big Lots said early this morning that it agreed to be acquired by Nexus and has entered into voluntary Chapter 11, which is a real Chapter 11, just to clarify, is a reorganizational bankruptcy for a business. But yeah, they are voluntarily entering Chapter 11 bankruptcies to facilitate the deal. And they said, quote, operating under new ownership who believes in our business and provides increased financial stability will improve our long-term profitability, end quote. The news comes after they said it was delaying quarterly results by 6 days to September 12th. Again, this is another example of, last week we talked a lot about Dollar General, Dollar Tree, and about why that business model will fail moving forward. I think this is very clear. This is very obvious. I think you're still going to have some people that have invested in them that, for whatever reason they got talked into investing in them, or maybe they believe in it, and that might be kind of hard for them to hear. But I think it's very, objectively looking at this, it's very clear that these businesses are eventually going to fail, right? Like, people aren't going to shop there anymore. They just don't need to. You have to consider the aspect of this, right? Like, you have to consider, hey, you got to consider why these businesses were originally founded. These businesses were founded, like Big Lots, Dollar Tree, when people didn't buy things online, right? And so if you didn't buy things online and you needed a couple things, you could go to these stores and buy whatever you needed to buy and get some stuff. It was $1, so you could buy and grab some stuff, and that's great. But at this point in time, you don't need that anymore. Right, at this point in time, most people just order stuff bulk online. And that's gonna get more and more common as technology grows, and as to be honest, as new generations sprout up that are very used to ordering things online. And again, it looks bad for these dollar stores moving forward, and that includes Big Lots, which is a dollar store basically. So Big Lots and other dollar stores style filing for bankruptcy. What's up, Quentin, Maria? All right. Yeah. All right, so we're looking at other stock market news. All right, guys. So we're gonna look at gold a little bit too. The SPY is in a very clear trend. All right, guys. So Best Buy had earnings, I believe, last week, and they gapped up a significant amount. So this is one of those stores where I think Best Buy might be a little bit more resilient to. So Best Buy gapped all the way up from earnings from $87 all the way to $100 a share. Big percentage increase. They had a decrease in sales, though, but their stock jumped almost 13% after it beat Wall Street forecasts and cut its future guidance, which is weird, but Best Buy is up. I do think Best Buy is one of those stores that people are still going to go to. All right, so we talked about Dollar Tree and why companies like Dollar Tree are probably going to struggle. Big Lots filed for bankruptcy. I think this is very obvious. One of the ones that's not as clear, I think, is Best Buy. I think there's a convenience factor of going to Best Buy. Like if you order something online, right, you're usually not going to order something that's really expensive to ship, that can get broken during shipment, that is the convenience factor of buying it in store is much better, right? So I think a lot of people are still going to Best Buy, buying stuff. They buy TVs. Best Buy did a really nice pivot towards appliances. So Best Buy recently, over the last 5 years, 10 years, pivoted to, instead of selling mostly straight up tech, they now sell appliances as well. And I think that's a great pivot. That's something that they needed to do. And so now essentially you go to Best Buy if you want to buy TVs, computers. And I know when I buy a computer, I don't ever get it shipped to me. I want to go try it out, feel the computer myself, see what it feels like, see how heavy it is, all that different stuff, see what it feels like to use it at the store. And so the convenience factor of buying stuff at the store is much higher with Best Buy than a lot of these other examples that we're using. And so I think that makes Best Buy a little bit more resilient. At the same time, though, it's not perfectly resilient. I think people are still going to order stuff online, and even if people still go to Best Buy, it's still going to lose business. But again, gapped up pretty big percentage on everything else. The other big news that we have going on this week is Apple. Apple has its annual product event scheduled for this week. Expectations are high. They have, it's their iPhone thing. Again, we talked about Dollar General and Dollar Tree. Dollar General faced a sharp 25% decline after it cut its earnings forecast. It caused a lot of concern over the health of its stock, so that's down. CrowdStrike is up after beating forecasts. So CrowdStrike had earnings last week. It surged 7.8%. And CrowdStrike, remember, was known for basically disabling a lot of stuff whenever it went down about a month ago. Even my views were weird for a couple weeks. Honestly, it had me kind of in what is this? Hold on, guys. Yeah. I don't know what that was. Something got in my mouth. I don't know what it was. Yeah. I don't know what that was. All right. All right, we're back. But yeah, so back to the news. I don't know what that was. Anyways, CrowdStrike bumped a little bit. If we look at CrowdStrike here, I don't know. Did they bump a little bit? Let me see. So CrowdStrike's still down. Let's look at a yearly chart. Yeah, so CrowdStrike rebounded a little bit. They ended up dropping all the way down to $200 a share. There's got to be some value somewhere down here, no? Right? There's got to be some value somewhere down here. I don't know, what it's going to do. We could also look at Intel here. Intel, man, one of the biggest downfalls, which is kind of shocking. You know, I'm surprised it hasn't rebounded back up. I think eventually it's going to be fine, but who knows, man? Anything could happen with Intel. I think this is one of those plays that I was wrong on for sure. I ended up buying Intel down here, and then I ended up selling it when it dropped like really big. I started buying it up when it started dipping down to like the low 30s. And then it dumped under 30 and had this, I got out at like 27s, I think. And so I avoided a lot of this big drop. But man, I was shocked to see Intel fall this much, to be honest, because Intel's still a pretty big company. It's, when you look at like its EPS and its revenue, it's not the worst looking thing. But yeah, tech's starting to sell off, including Nvidia. Investors took profit and Nvidia dipped down to 104s. Are we going to see a green day today? I really don't know. Yeah, we're streaming GameStop tomorrow for sure. John, did they change their mind about hating non-farm payroll numbers? Well, maybe. You know, the market's down. Whatever reason, the market's down Friday. Yeah, GameStop earnings tomorrow evening. I would like a 99% discount on the SPY. Okay, everybody would. Intel is about to spin off its foundry. AMD had to do the same thing at its lowest point. Yeah. Thoughts on Palantir? I sold at $29.20 and refused to get FOMO gapping after. Yeah, so I saw this news on Palantir. You know, Palantir gapping up to 33s. Pawn sent me something about this. So yeah, shares of Dell and Palantir popped popped in after hours on Friday on news their inclusion in the S&P 500 index. So Palantir and Dell getting added to the S&P. Dell stock was up nearly 5%. Palantir spiked almost 8%, both nearing their 52-week highs. The S&P Dow Jones indexes published their list related to quarterly rebalancing of stocks on Friday after the market closed. Changes are going to take effect September 23rd. So the last trading Monday before the quarter ends. So yeah, Dell, Palantir getting added to the S&P. This is music to Palantir's ears. And again, I've been a big investor in Palantir over the last year too, so it's good to see this. You know, do you guys like Palantir as a company? Opinions on PayPal? I think PayPal. I like PayPal, and if you guys remember, I bought PayPal earlier in the year. I bought it at like $50, right? It's back up to $70, so a pretty big percentage gain back up relative to where I bought it. It's up, you know, it's up like, it's up like 35-40% from where I bought it, and so it's a pretty good gain there for PayPal. Now, PayPal in the future, I still think people use it. I think it's vulnerable to some competition, but I still think people use it. So I'm relatively confident in PayPal. I'm not super confident in it, you know. But good luck. Y'all be careful. I have no idea what anything's going to do. Not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly. Again, I have no idea what it's going to do. Did the market buy up and sell off last Friday and Monday? We might be having the inverse effect today. Yeah, well, it's CPI inflation week. So hey, good, nice, AD. Solo, I'm loving PayPal right now. Yeah, PayPal. Again, I bought it at $50, remember. And it's back up to 70s. Went as high as 75s. So I was up 50% at one point. Yeah, so again, the iPhone thing's coming out today. I think it's today, right? So the upcoming iPhone Series 16 from Apple. It's going to be powered by ARM. So ARM stock. It's the latest chip tech designed to improve AI capabilities. It's going to be launched today during the Glow Time event featuring next-gen chip based on ARM's newest design architecture, reported Financial Times. It's going to be showing their ongoing effect in efforts to integrate advanced AI features into their smartphones. They're going to be using the A15 or the A18 chip. It's going to be unveiled today. So that's pretty big. What time is Apple's event? It's at 1 p.m. Eastern. Yeah, this is something I don't usually cover Apple's events. So I don't know if I'm going to cover it. I'm just going to watch the stock. See what the stock does. PayPal is also a value story that will return a lot of value to shareholders in the next couple of years. Yeah, potentially. It's the businesses PayPal owns, really like Braintree and Venmo. Yeah. Well, PayPal's kind of got a lot of holdings and acquisitions, so for sure. I sold Nvidia at 104. I'm wrong. What should I do? I'm so confused. Yeah, I mean, Raphael, again, I have no idea what you should do, brother. All right, guys. How much it affect with it? I don't know. I don't know how much the debate's gonna have on the market. I'm sure it's gonna have some effect. I'm sure it's gonna have at least some. And I've thought streaming the debates, but again, I am very neutral. And again, I think I'm just gonna avoid that. I don't know if I want to take my channel to that. I know other people do, and then other people ingrain like politics in their channels, and that's fine. I'm not against you. That's their right to do. I just don't think I'm going to do it, personally. I think selling Nvidia at these levels is a mistake unless the market turns. Yeah, I think this is pretty cheap levels for Nvidia personally, especially recent. But who knows? He said, I think selling Nvidia at these levels is a mistake. See 130, 140 again is really likely. Yeah, but when? I think it's likely, but it might take time. Maybe it drops to 90 again, but we have bounced off of these levels many times. Yeah, for sure. Going to sell Nvidia after a huge drop doesn't seem rational. Yeah, people are emotional is what it is, right? So like people just get emotional, man. That's how it goes. Dude, I don't know if my service is bad or what, but yeah, I hope I'm not lagging too much. Yeah, I'm not gonna do it. Yeah, I'm not going to pawn. Like honestly, I'm already busy enough. Adding politics to the mix is just gonna make it stressful. All right, guys. Yeah, so SPY pulling back to that 200 EMA level. Nvidia is very basically just choppy right now. Look how choppy Nvidia is. Yeah, so again, just very choppy. Here, sorry, I've got some windows. I can probably exit out of this. I'm looking at other stuff too. Let's see what else we got. Alibaba is set to be included in the Shenzhen Hong Kong Stock Connect. Tesla at 215. So Tesla came all the way back down, but look at Palantir this morning, man. Tesla at 215s came all the way back down from the 220 levels that it was at. So All right, guys. Yeah, so I'm looking at PayPal. I'm looking at Nvidia as well. Honestly, my little indicator thing, check it out. Again, just kind of giving you some good examples. So here's the indicator I developed. Look at that, man. Honestly, people can try to hate on my indicator. I don't know what I'm going to do with it, but look at that. Beautiful top. Literally called the exact bottom. Literally called the top of this range too. On a 1 minute chart as well, which is usually the most difficult, like rangy thing to predict. It's like the hardest thing to get right, you know. So all right, chat. Yeah, I'm looking at it. Catch it back up. This background music is dope. Hey, thank you, man. Intel considering selling parts of its stake to Mobileye to improve its financial position. Yeah, I think Nvidia just has to stay, or I think Intel just has to stay alive. And he talked of Palantir. Yeah, so we already talked about it. So Palantir getting into the S&P 500 along with Dell, right? So they're adding it. It takes effect September 23rd. So September 23rd is when it happens. September 23rd is when it takes effect. So yeah, I don't know what I'm going to do with it, Christian. Like, I really don't know, to be honest. I've built a couple different ones that are all kind of solid in their own ways. So I don't know what I'm going to do. This Wednesday, what's going on this Wednesday? So this Wednesday is CPI inflation data. It's one of the biggest events of the month. And it's a very relevant event with the oncoming rate decision. The rate cuts are almost here, right? So the rate cuts are almost here. And so with that potentially happening this month in September, it's just a big week, man. It's a big week. We got inflation data coming out Wednesday, Thursday. We have PPI. Wednesday's the big one with CPI. They're both relevant, but Wednesday's the biggest one by far. Thursday, we also have jobless claims, unemployment filings. Tomorrow, we have GameStop earnings, which, you know, GameStop has been on a little mini squeeze. I think it pulled back, though, and contracted a little bit. But GameStop has been on a little rebound back up. If you look at GameStop here, you know, when we take a peek at this, like GameStop has been fighting its way back. It was under 20 on the 28th in August. So, when is what? So we got GameStop earnings. We got GameStop earnings, and then we have CPI inflation data Wednesday, PPI inflation data Thursday. That's basically what we got going on right now. And again, we also have news that Palantir and Dell are getting added to the S&P. Taking effect September 23rd is what happens. After listening to Waller on Friday, I believe we're cutting 25 basis points. Yeah, he seemed like all the Fed members have essentially been pushing for cuts, is what I see. The rate decision is not this Wednesday, but next Wednesday. Poker. It's next Wednesday, basically. Yeah, I don't think we need 50 basis points. All right, chat. Yeah, so I hope they don't cut. Well, they're going to cut rates, right? A cut is almost inevitable. They're going to cut. Now, the question is, how much do they cut? I don't think that they are going to do... I need to cut these sideburns, brother. They're looking a little thick. Now, I don't think they're going to do 50 basis points, but they could. I hope they don't. I think 25 basis points is fine. 50 is a no-no. I think 50 is going to make people panic, and I don't think it's a good move. I think it's a terrible thing if they start trying to cut over 25 basis points. And it's going to make everybody's inflation problems worse. If you're unhappy about prices right now, which is mostly everybody in the country. Again, people don't understand. Like, the rich and poor do not like these price increases. Nobody's happy about them. Right? It doesn't matter how much you make. I make decent money. I'm not going to say I'm rich, but I make decent money. I'm not happy about prices going up. Nobody is, right? Prices going up negatively impacts everybody. And I don't want prices to go up again. And the way prices go up again is if we cut rates aggressively, right? Why do prices go up again if we cut rates? Because when rates go down, people spend more. And when people spend more, what happens? Businesses raise prices. That's common sense. It's logic. And so by cutting rates aggressively, the only people that really want that are lenders and people who benefit from cheap lending, right? So like real estate professionals, mortgage brokers, banks, they're the ones that want rate cuts. Everybody else should not, because everybody else should recognize that cutting rates, especially cutting rates aggressively, i.e. over 25 basis points, is going to make everybody else's problems much worse. And then people are going to be sitting here complaining about prices, talking about how bad things are because prices are so high, whenever they're the ones pushing for rate cuts. Again, it doesn't make sense. It's dumb. So again, I do not think we should cut rates aggressively. I think if we maintain it with just 25 basis point cut and we ease slowly into cuts, I'm okay with that. But if we super go heavy out there and start 50, 75 basis point cuts per period, I think that's horrible. And I think it's going to make problems worse. I bought Palantir at like it was like $16, I think, is where I bought Palantir at. I think what I did was I bought Palantir and then I sold it and then I bought it again. So I mean, yeah. Hey, you're trying to act like I didn't take advantage of it when I certainly did. I certainly made money on Palantir over the last year, But again, I bought it at like $16 is where I remember buying it. Nothing more than 25 basis points would signal weakness. Right. If we cut rates aggressively, what's going to happen? The market is going to panic. Yeah, I mean, you just sound bitter, Gift. I mean, let it out, man. It's okay, dude. Like, I think I think your big problem in life, brother, is that instead of moving on with your life and like figuring out your own like way, like you instead just hate on anybody that you're insecure about, right? So if you think somebody's doing better than you kind of just lash out and get weird and insecure about it. And so cheers to you, bro. But it's just not going to help you, man. Like, you're going to have a much happier life, like, moving on. Find things you're passionate about, getting involved with those things instead of, like, harassing a YouTuber. You know what I mean? That's not going to make you feel good. It's going to make you feel bad because we're going to keep growing, man. Like, my channel is going to continue to grow, and we have. Like, you look at the channel over the last 5 years, we've just gotten bigger and bigger and bigger. And so hating on it is just going to make you feel bad, brother. I'm trying to help you, man. Cheers to you. Yeah, he's just going to get banned, Ty. This is certainly somebody that's been here before, that's been banned before, and for whatever reason, they're just kind of like really unhealthily obsessed with the channel. Again, I feel bad for him, man. I really do. Anyways, going back to the comments, 25 basis points to prop this market up. Yeah, I'm okay with 25. I just don't want it to be, what I'm worried about is like rate cuts every single meeting. You know, that's bad. That'll make rates go down quickly, and that'll make, like, people, the real issue that I have is people acting like we have somehow like a super weak economy, right? Like, usually these are lenders or people that benefit from like cheap access to money, and so they're trying to act like we're somehow in some massive recession when we're not. And again, the real problem is that when interest rates go down like that, everybody spends more and prices get worse, and they've gotten really bad over the last 5 years. Really bad. Prices have gone up a shocking amount to where people are so unhappy, they're just not used to it. And what's going to make that problem worse is aggressive rate cuts. Aggressive rate cuts is going to make that problem worse. Hey, thank you, Robert, my guy. Thank you, brother. I appreciate it. House owner mortgage loan bar. Yeah, people who want to get mortgages 100% want rate cuts to a certain extent, sure. But it's not always the best time to buy a home. You know, like sometimes it's not a good time to buy a home, especially not a good time to get a mortgage. And I think that's okay. We need to discourage those markets a little bit. They're up a ton. Yeah, Dell and Palantir both joining the S&P 500. Yeah, credit card debt definitely an issue too. So you think it would be better to keep rates higher and crush the labor markets? The labor market trends are already beyond weak, and we have bond yields. Uninverted recession is coming. In what way are the labor market trends beyond weak? Pew pew. Genuine question. In what way do you see that? Again, unemployment at 4.2%, right? Not objectively, on average, high. Payroll numbers have still been pretty strong, like despite any one reading. If you look back at payroll numbers over the last 6 months, they've been pretty strong. They haven't necessarily shown big like signs of massive weakness or anything like that. GDP is still at 3%, you know. And so, I mean, in what way are we seeing that? You know, I think it's easy to isolate like one specific reading and then use just one reading as your example of why you think we should, you know, stimulate the economy again through rate cuts. But I don't think it's a good move, personally. You know, I don't think it's a good move. And again, I think you have to look at like an array of data before you can really say, hey, things are weak, right? We can't isolate one reading. I could isolate a reading and say, hey, things are good or things are bad. Anybody can do that. We have to look at all of them over the last 6 months, not just one. And I think when you look at all of them, labor markets are decent. Unemployment's still relatively low, you know. GDP is good. Right. Again, I'm not saying things are rosy or perfect. The real reason people are unhappy is inflation. Right. Prices are freaking obscene, and they have been for a year plus now. And I don't want those prices to go up again. And so that is my reluctancy to bring rates down. You know, I think real estate has appreciated freaking almost 70% in the last 5 years. 70% in 5 years. You know, like I think we can keep rates high and have a market where lenders aren't getting rich for a little while. You know what I mean? Like, that's okay, and I think that's good. I think it's necessary. I think if we pander to lenders too much, then we're going to cause more inflation problems that are going to negatively impact everybody. And so it's not as easy as just, you know, it's not as easy as always having a low interest rate environment so that lenders can get rich and so that people can always have super cheap access to money. That's not feasible. It's not sustainable. It's going to make our problems worse. And it's really why we have these problems to begin with. And again, I hope we could agree to disagree. And if you disagree with me, it's all good. You know, it doesn't, maybe I'm wrong. I could be wrong here. Maybe we do need rate cuts. I don't know. I'm not one that likes it right now, but again, I'm not involved in lending. It's easy for me to say this because I'm not if I'm a real estate agent or a mortgage broker or somebody that really wants rates to go down, like a lot of them did really, really well after 2020, and then their business fell off a cliff, right? And so a lot of them are unhappy, but I don't think we can, like, that's the nature of those businesses. I think we have to do what we got to do to protect prices from going higher. Yeah. Yeah, I mean, autos are... Yeah. We actually need higher rates? Yeah, I mean, I don't know if we need higher rates. People acting... Here's the problem. People acting like rates are somehow obscenely high right now. That's not accurate. Like, if you look at objectively, if you look at, like, the federal funds rate, right? Which is the Fed's short-term interest rates. And we look at the federal funds rate right now. Right? Like, we're not even, like, I would say over 50%, or we're not even in the top 50% of where rates are. We're here. Now people are acting like bringing rates down to here is what's needed. But again, rates are already pretty objectively low over a 30-year period of time, 40-year period of time. And so it's not like rates are up here and we are like, need to just bring them down. That's just not what the reality of it is. If you look at all of this stuff. Yeah, CPI expected to come in at 2.6%. Again, the Fed likes to look at PCE data, which came out a couple weeks ago. So I'm going to put it in sub-only mode. So if you haven't already, hit that subscribe button, hit the notification bell. I appreciate it. Yeah, the funny thing is somebody telling me that I, like, trying to be like, haha, we made money on Palantir, like I've been against Palantir. Dude, I got in Palantir at like $16 back. This must have been like at the beginning of this year. Maybe, no, this was last year, I think. And I held Palantir a long ways up. And so, you love to see it. You love to see Palantir high. I'm for it. It's not a problem anymore. Yes, price is still high, but that's not inflation. Well, sure, prices are high. I mean, number one, prices are still going up. Okay, they're still up. They might be up like a very small amount relative to what they were moving up at the speed they were moving up, but they're still going up. The other thing is, this has to do with prices. This has to do with avoiding price spikes again. Okay, because if we bring interest rates down, right? Say interest rates are here. And we bring interest rates down, right? What is the consequence going to be, right? When people are paying less money, when people are getting better interest on loans, they're getting better interest on car loans, auto loans, housing, they're going to spend more money, right? Like, and sure, it'll stimulate the economy, and it's an election year, so that's what they're pushing. You're like, oh, let's stimulate the economy, right? But it's a bad move. It's going to cause problems to be worse. It's going to cause inflation to spike. It's going to cause all these problems that you guys definitely don't want. And then when the prices are going to be higher after stimulating the economy again, then people are going to complain about the inflation. That's the nature of things. They push forward and then they complain about what happens from it. And again, I'm okay with 25 basis points as long as we're reasonable with it. I think if we start pushing 50, 75 cuts, if we start trying to cut too fast, not only is it going to cause people to panic, people are going to think something's broken, but it's also going to have a much greater chance of it spiking inflation. And so I think easing into it is the move. And I think the Fed will. I think the Fed will ease into it. If we look at the actual probabilities behind it all, right? If we look at the actual probabilities, again, the Fed rate decisions in 9 days. Right now, 77% chance of a 25 basis point cut. So that's fine. So this is as expected. This would be a neutral outcome if we cut rates 25 basis points. And so I'm okay with that. I'm okay if we cut rates 25 basis points. I don't want to see this right here or higher than that. I don't want to see 75, 50, and then continuously pressuring cuts. I don't want to see that. When's quad witching? It's never quad witching anymore. It's triple witching, but they still call it quad witching. So it's going to be September 20th of this month. So September 20th is triple witching day. You're a top 3 market interpreter. I appreciate it. Lang DCA method. So it's the 20th. Can you trust the government after the huge jobs revision? I mean, they're always going to revise stuff, but I think, yeah, we're going to cut, Joe, unfortunately. Yeah, I mean, Rumi, I understand why we had the big inflation spikes, Rumi. I really genuinely understand it, okay? So basically, 2020 happened. What Rumi is saying here is that in 2020, after the pandemic, the Federal Reserve stepped in and they brought rates to almost zero. And again, if you think that didn't contribute to higher inflation, you're crazy, right? Number one. Number two is that what you're really referencing is the quantitative easing that happened in 2020, right? What quantitative easing is, it's Fed creating bank reserves and then using those bank reserves to buy financial assets like bonds, injecting liquidity into those markets, and that's what caused the inflation as well. 100% agree. That's definitely what caused the inflation. My problem is that currently we've been doing quantitative tightening, right? And I'm okay with quantitative tightening, which is basically restricting the Fed restricting, money instead of injecting it. And I'm okay with QT right now. I think we should continue to do QT deep into this. I'm okay if we cut rates and continue QT, to be honest. But I don't think that's what they're going to do. I think they're going to try to end QT and then they're going to try to pivot to a low interest rate environment. And I think that's going to cause inflation. That's the problem. That's going to cause inflation. Now, it might not cause us to spike up to almost 11% like post 2020 and 2021 and 2022. But it's still going to make our inflation problems worse. And again, in my opinion, like, we've already had such big inflation spikes, we can't really handle that. The other thing the Fed did was they sent out stimulus checks, right, which certainly contributed to inflation spikes as well. You know, Rolex prices doubled. Louis Vuitton prices went up. If you notice, luxury good prices are up everywhere, and they haven't gone back down yet. And I don't know if they will go back down. And that's insignificant. But the point is, we can't always maintain a low interest rate environment. It's not just about like government spending. It's not just about money printing. It's also about real estate prices have gone up. Like, look, real estate prices need to correct some. If we look at the Case-Shiller house price index, yeah, so if we look at the Case-Shiller house price index, house prices in the last 5 years are up almost 60%. You know, like, these markets can handle a correction. You know, like, listen, if house prices are in the gutter, okay, if house prices were incredibly weak and house prices were crashing and real estate was failing outside of commercial's always struggling. But if residential was failing, I would probably agree with you that it's time to cut rates, save us from that environment. Sure. But real estate's not failing, you know. Residential's not failing. In fact, the prices of homes are going up too much. You know, we can deal with corrections in these markets. If you look at the auto sector, you know, freaking used Toyota Tacomas getting sold for like 30 grand, 40 grand. The markets are obscenely inflated. And so trying to bring interest rates down more is just going to make it worse. Yeah, Tesla's just really volatile. September 20th is the witching day for sure. Um, Could they want the interest rates low so the debt payments are cheaper? I mean, yeah, I don't know. Again, it's certainly not. It's certainly nuanced. Like there's good and bad things about cuts for sure, you know. And again, my bias is like I don't need to buy a home. Like I'm not gonna get a mortgage anyway, and so that's my bias. Nobody buying homes right now with rate cuts so close. Sellers are a bit desperate depending on their situation. Do you live in Canada? I live in the U.S. and I'm also a licensed real estate agent as well. And so again, like trust me, I would love. Look, I don't really do a lot of business as a real estate agent. I'm pretty sure my license is actually inactive right now, right? But regardless, I can see house prices. I'm also about to buy a property as well, but I'm about to pay cash for it, and it's going to be an investment property. It's not going to be mortgaged in any way, you know. And so again, I'm okay with keeping interest rates high because I get more bang for my buck in regards to cash. I can cash deals will be a little bit better, but there's still risks doing it right now because if we cut rates, you know, the logic of it is like we could bring interest rates down, and it's probably going to benefit. It's going to change. Right now, it's a buyer's market for sure. Like right now, there's a bunch of properties that are pretty cheap. So you think I don't own a home, Rumi? I mean, okay. Good day to you, sir. Yeah, no, nobody knows how the market's gonna react. You know, like I said, I'm always like, we can have good conversations, but like, if you try to get disrespectful with it, you're just gonna get banned, right? Like, again, me disagreeing with you shouldn't make it so that you got to be disrespectful. And again, being disrespectful just shows emotion. So I guess the point I'm trying to make is stop being so emotional, brother. Like, again, I'm buying an investment property. I'm not living in a cardboard box right now. I'm certainly not renting the house that I'm in. So the math of the rental property, Robert, goes something like this, right? It's not perfect math, you know. It's not perfect math. Right, 100% tie. It's crazy how quick you can tell when somebody just, you know, gets weird. And again, people are weird in general, right? Like a lot of people are so emotional about it. Like if you have any type of disagreement with them, they immediately like look at you like an enemy, you know. And I know the word narcissist gets thrown out there a lot, right? I think it's overused, it's overaccused, but I think people who can't stand to be wrong and instead lash out and disrespect when they could be get kind of weird. But anyways, back to the point. So the math of real estate goes like this, right? So the good part about real estate, right? The reason real estate's a good long-term investment usually is because on average, real estate will appreciate about 4 to 5% a year on average. And so let's say you got a $250,000 house, right? And let's say it appreciates 4% a year. Okay, so over a 10-year period, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? So over a 10-year period, if you appreciate on average at 4% a year for real estate, you're going to profit just in appreciation about 120K, right? 120,000 in profit from just appreciation, right? So percentage-wise, you're going to profit. Hold on. Percentage-wise, you're going to profit about 48% over a 10-year period in real estate. And that doesn't include cash flow that you get as the investment, right? So let's say there's a rule in real estate. It's called the 1% rule. So let's say you make 1% a month, which is about $2,500 a month. We'll call it $2,000 just to be conservative with it. So let's say you make $2,000 a month based off of a $250,000 rental property, right? So number one, you're going to be giving up at least 40% of that in expenses and taxes, right? At least 40%. So we'll take 40% off and leave you with about $1,200 in profit. About $1,200 in profit a month, right? So and again, I'm going to go ahead and take another $200 just for the unknown, and we'll call it about $1,000. So not only are you going to be making about 50% over a 10-year period, you're going to be appreciating about 4% a year. You're also going to make about $1,000 a month in profit from it. So that's about $12,000 a year times 12. So you're going to make about $140,000. $144,000 in rental income over a 10-year period, right? And so when you add those up, it's much more than 5% that you get in bonds, and it's much less passive, but percentage-wise, you're going to make 10 to 15% on average a year in real estate. It's certainly not passive. It certainly takes work, but it's certainly possible to make good money in it. And again, everybody's trying to get over 10%. If you want to know how, what people are doing, they're usually trying to make over 10%. So 10% is kind of like the margin. Can you beat the stock market is the other thing. But again, that's the math, and it's not perfect math. There's always unknowns. It's insecurity, 100%. Whenever you do something for yourself, yeah, the rates should not be cut. Yeah, I'm okay with 25 basis points. Yeah, 100% C. But that totally has to do with the region or area in the U.S. Well, sure. I'm just looking at my own area here. GameStop earnings are interesting for sure. So GameStop earnings are very interesting. GameStop earnings should be fun. GameStop has gone on a little bit of a run this month so far in September. So GameStop has gone on a little bit of a run. Yeah, and just to put this in perspective, so the guy said that I don't own a home, which is completely wrong. If you guys watch my live stream, right? So if you watch my stream, if you watched it for long enough, I bought this home in 2021, right? So, the home that we're currently in has appreciated a ridiculous amount in the last 5 years, and so being hey, you just missed out on the appreciation, so you're mad about it. That's not accurate. You can look at my stream and see where I was at 6 years ago and where I'm at now. And it's a different place. We obviously moved, right? And this is a much bigger house where I actually have my own dedicated office. So the amount that our house has gone up in price is significant. I'm not going to go into specifics, but yeah. Usually the people that lash out like that, they're usually just real estate involved. They're involved in real estate. Maybe they're mortgage brokers, whomever. And they made a lot following 2021. but then their business fell off a cliff, and so they're desperate for rate cuts to save their business and save their life, basically, and that causes a lot of like emotion and like unreasonable behavior, where you gotta stop, take a step back, understand that like what's good short term might not be good long term. Hey, thank you, Stans, appreciate it, brother. Yeah, 100% pawn. Scott, dude, Scott was just freaking weird, man. That dude is just off. But we also upgraded, What if Powell goes crazy and tells us we're not ready for rate cuts? I don't know. I think the market probably will negatively react. But again, if we're not ready for rate cuts, it usually means inflation is too big of a concern, which I would kind of agree with, right? I think they've already baked in rate cuts so much now, though. So, like, basically the Fed and all the Fed members have come out really pushing rate cuts for the last few months to where they've kind of dug themselves in a hole where we're inevitably going to cut rates this month. Like, and if they come out and say we're not, that's going to cause like a shock, a jolt to the system. The market's negatively going to react to it. Yeah, I'm not sure, John. It depends on where you live regarding the real estate market. GameStop earnings are tomorrow evening. Why do you need to justify yourself? I'm just explaining people my stance. I think it's important for people to understand my stance and understand that it has nothing to do with me like missing out on buying a home. I think that was important to clarify. Yeah, it'd be a huge rug pull if he does that. It's a terrible idea, right? I don't think he's going to do that dream of stuff, but he could. It's just not. It's highly unlikely. Nothing's impossible, but it's just highly unlikely. You went on his channel to talk about crypto on a live stream. Yeah, I'm not sure, Doug. Thoughts on real estate in Canada? I don't understand the Canadian real estate market like that. So I don't know. And again, I'm not sure anybody that I went onto their channel to. Yeah, I don't know about that either. What type of music do you listen to? I listen to a lot of different stuff, man. I'm kind of like a rap nerd, but I also listen to like, I listen to some rock. I listen to some alternative music from the 90s. I listen to some like electronic music, I listen to a bunch of different stuff. Listen to some country. Luke Combs is good. I like some Luke Combs. All right, guys. Journey's good? Yeah, Journey's good. Are you guys getting any lag today? All right. Yes, a little bit of lag. Yeah, I don't know what is wrong with. Let me do a speed test. Yeah, so our ping is 2. Yeah, our internet sucks, dude. Why the heck is my download speed only 100? That's terrible. As long as my upload's good, I guess it's fine. But yeah, so weird, dude. Yeah. Alright, guys, so yeah, look at Palantir, though, man. Palantir flying. Hey. Hey, baby, the dogs are yelling and barking. You gotta bring them in. Alright. Love you. Sorry, my dogs are yelling out there, so my wife's gotta bring them in. Random dumb question. When will or if rates cut will be announced, how long will it take effect after it's announced? So, the thing you got to understand about rates in general is that short-term interest rates are what we're talking about when we say rates. We're talking about short-term interest rates. So we're talking about what's called the federal funds rate, which is the interest rate that banks charge each other to lend money overnight, right, or to hold money overnight. It's called the federal funds rate. It's short-term rates. Now, eventually this will trickle into long-term rates, but there is a lag, and so it usually takes 6 months to a year to really start impacting long-term rates like mortgages and stuff like that. But you know, shorter term rates, it might be faster. Like auto loans, it might hit them a little bit quicker than long-term loans. So it takes time to impact things. It's not like the Fed's going to cut short-term rates and it's immediately going to start impacting long-term rates, but there will be some type of sympathy movement from it, if that makes sense. So if the Fed starts to announce a rate cut, it's gonna influence markets just in anticipation of the rates going down, right? So just like it's gonna influence real estate, it's gonna influence all that stuff. What do you think about the new singer for Linkin Park? I love Linkin Park, bro. I grew up with Linkin Park. I really did. You know, I'm okay with them doing whatever they're gonna do, and if they've got good music, I'll listen to it. I don't really care. My issue is that, like, I think Scientology is kind of sketchy, and so that's my only problem. Is that, you know, I think Scientology is kind of sketchy. But you know, I don't want to get too deep into it. It's too controversial. But again, if she's good, I'll listen to it. If I were them, and again, it's their decision. I love Linkin Park. Like I said, I grew up with them, and so they can do whatever they want to do. But if it was me, I would just create new music. But I'm sure they're trying to monetize their old music too, and so if they benefit from it, I support it. Like, it's all good. Yeah. Alright. Yeah, this looks like my computer's lagging a little bit today. My bad. My computer's acting off for sure. And I reset my computer before I started it up, so. Yeah, I don't know what's wrong with my computer right now, so my bad, guys. We're trying to make it work, but. Yeah, like something's coming up with the. Let me see. I'm trying to check my internet service, and I can't really complain. Also, guys, if you haven't already, check out TopStep. TopStep funded account program. I'm probably going to do a day trading show today. So I think I am going to be doing a day trading show. It's been a minute since I did one. And so we are going to day trade live at the opening bell. So stick around, chat. I appreciate the love. And again, we are going to be doing a day trading show today. Sorry, I'm kind of switching around, trying to, but yeah, I don't know what's up with my internet. I honestly, my internet's been weird for again, my internet's been weird for like the last like week, especially. It's been off. Alright. Hey, what's up, Jep? Nothing happening. Yeah, so again, Nvidia is very choppy. Look how choppy Nvidia is. It's basically in this tiny little range. Where we're watching for is look, here's Nvidia. What we're watching for, and you can kind of see it's in this little range here. What we're watching for is the 200 EMA and volume weighted average price levels. So you can see the 200 EMA right here, this yellow line. The volume weighted average price is this other line. So we're watching for that. And again, we'll see if we hold. We'll see if we move. You know, time will tell. Yeah, I mean, I grew up in the 90s and 2000s. I remember the first Lincoln Hybrid Theory CD. Loved it. Listened to it all the time. It was like them and Limp Bizkit and Blink-182 and The Offspring. And there were a lot of good bands that I would listen to back then. You know, Limp Bizkit, they used to be like an embarrassing band. And I guess they still are to a certain extent. Right, but they were really popular in the 90s, fell off for a couple decades, and now people are starting to appreciate their music again. It's just kind of angry music, but it's like, again, I grew up on it. It's all like old music that everybody back then, like in the 90s and 2000s, listened to it. But yeah, check out TopStep. TopStep funded account program and futures. Honestly, I can't talk about it enough. TopStep is really powerful because TopStep X has 0 commissions. And so they give you a demo. They test your skill with the demo account. If you pass the test with the demo, they fund you with the regular account. You can kind of see my trades here. And like we did build up some profit. And so this is a powerful thing for funded accounts. It really is. This allows me to trade micro contracts with no commissions, which is crazy like beneficial. It's genuinely a powerful freaking thing, man. I'm really, really excited about it because it allows me to trade micros with no commissions. And so they give you a demo, test your skill with that demo. If you pass the test, they fund you. If you fail it, you only lose what you pay for it. On TopStep's case, it's only $49. If you lose, you're only out $49 a month. But if you pass it, you get the $50K funding for the base one with a 90% split. To pass it, you got to make $3K without losing $2K. And so it's a reasonable 2-to-3 ratio. And again, they have some of the best rules in the game and funding in the futures market. In the futures market, you can basically day trade the SPY and Q price action, no PDT roll in the E-mini and the NASDAQ. Patterns are very similar to blue chips. And it's just a really powerful thing because to trade the regular NASDAQ, it's super volatile. It moves up and down. I can lose thousands in seconds on the regular NASDAQ. And so maintaining risk on that's difficult. The powerful thing about Top Step is that once you're funded, there's zero commissions, or not even when you're trying to get funded, there's zero commissions with micros. And so what this allows you to do is take these small, like you can see my P&L here, like $6, $20, $11, $24, $22, $19, $15. I'm taking these small scalps, these small gains over and over again. You can see my fees. There's a small amount of fees per trade and no commission. My fees are only 74 cents a trade. And so I can take these little small trades and really let my edge play out and build up profit. And again, it's a powerful thing. It really is. I can't underestimate, or I can't state it enough. It's a powerful thing, and it ultimately allows you to limit your risk. And if you have an edge like me, really let that edge reflect in your trading. Some of the best rules in the game once you're funded, and Top Step's been around for over a decade. They've paid out over $40 million. And so if you want to check it out, here's the link. I appreciate the love. Yeah, nice. Yeah, good to work out too. It's just one of those days. Yeah. It's about $49, depending on if you win or lose, though, Michael. If you lose, you got to start it over. Yeah, I kind of feel the same way. All right, so yeah, we got our day trading stream coming up. Add the redirect, make sure we're redirecting to the day trading stream. Again, today, tomorrow, pretty slow. Wednesday's when the big stuff takes off. Yeah, honestly, I've seen a resurgence in in record stores recently too. Yeah, so record stores have kind of taken off and gotten really big. They have rules about drawdowns. Yeah, so Top Step. So again, their rules go like this. You got to make 3K without losing 2K with 5 contracts max. This is the base one. There's more rules than this, but these are the base ones, right? The good news is that there's no trailing drawdown, I'm pretty sure, on Top Step. And y'all can correct me if I'm wrong. And again, they're an affiliate of mine. They pay me money, so I'm biased in their favor, of course. They pay me money. I'm biased. I understand CFTC 4.41, hypothetical or simulated performance have limitations. I do trade off stream. You're not going to see all my trades, all that good stuff. You want to just check everything with them to be safe. But yeah. All right. So look at Tesla, though, guys. Tesla's starting to rise here. Tesla at 216s. So Tesla had a big red day. Tesla was at 235s, honestly, which is a big thing. Tesla was all the way at 235s. It's now fallen all the way back down. Speed racer on the keys. Top 3 fastest typers ever in the world right now. It's been a while since I did a typing test. Hey, that's cool, Daphne. That's a cool story. For sure. I'm in my mid-30s. Somebody's asking me how old I am. I'm in my mid-30s. But again, Tesla, Palantir. Again, Palantir did a deal with... here's Palantir. PLTR did a deal with... Palantir and Dell is actually getting added to the S&P 500. So you can see Palantir up a huge percentage. Here's Dell. And this is a really good sign for a company. If they're getting added to the S&P, really good sign. I think with Dell, it's a little bit late. But Dell computers have been doing very well also. So Dell computers have been doing great. Again, I think Dell, it's kind of late though. Yeah. All right. So again, we are going to be doing a day trading show a little bit later. Yeah, we had to. I always try to jump people. You know, I always feel bad about one. So I'll tell you guys this story. So one time when I was a teenager, I had this lady that basically came up to me and asked me to change her tire, right? And she was older, and so I helped her. You know, I changed her tire. I stopped. But afterwards, I can't remember whether I was in a hurry. I can't remember whether I tightened her lug bolts or not. Right? I had to. You know, I had to have tightened her lug bolts. But for whatever reason, I can't remember if I did or not. And I still think about it to this day. I had to. But, like, there's always that, what if I didn't? You know? And luckily, she was just going down the street, and she didn't want to get her car towed. So, hopefully, they figured it out. But, it genuinely still bugs me to this day, right? Like, I think I did. But I'm not 100% sure. But, again, in hindsight, I had a friend with me, and I feel like if I would have forgotten to tighten her lug bolts, he would have been like, hey, bro, what are you doing? You know? Yeah, so the drawdown is 2K. So you got to make 3K without losing 2K in the account. That was me, John. You didn't type? I know, man. Listen, my fault, dude. My fault, man. Yeah, again, I'm going to day trade. I'm going to live stream a day trading show today. We'll see how it goes. We'll see how it goes. And again, I'm going to try to, I'm going to wait to day trade on the actual top step account. But honestly, the market's super freaking boring right now. Like, look at Nvidia, guys. Nvidia hasn't moved. Like, look at this. So there's just not really much going on right now. Like, look. This is literally Nvidia's entire price action all morning. That. You know, the SPY is up a little bit, but that's just because it dropped such a huge amount on Friday. You know, Dell is up. You know, Palantir is up. We got some stuff going on, but really today and tomorrow kind of boring. Wednesday's when things heat up. You know, CPI week is like the big story of the week. But man, all right, Tesla at 216. But the market's boring. Nothing's going on right now. Phillips 66 is announcing U.S. denominated 3-partner 7-year tap, long 10-year and 30-year. Again, it's CPI week, so that's big. U.S. is proposing mandatory requirements for frontier AI models and cloud computing clusters. Fitch says that national central banks compromising euro area and ECB face prolonged losses due to higher interest expense and commercial reserves. Commercial real estate's also been a struggle. Let me see. Yeah, commercial has been struggling. So people talk about real estate, but what we're really talking about is commercial. Here's commercial real estate. And again, this is going to continue, right? Like the trend of this is obvious. Why is commercial going to fail? Because businesses change, trends change, technology evolves, and people don't need to pack warehouses full of people anymore. I say this all the time. It's true. Commercial's been a freaking struggle. Here's a 5-year chart. Commercials fell off a cliff. And it doesn't take low interest rate environments to fix this either. Like, I guess the easiest way to put this is, would you lease out? Commercial leases are long. Are you going to, like, again, I had somebody that came up to me and wanted to do a jiu-jitsu gym with me, right? And I started looking into it, and the reason I didn't end up doing it because, to be honest, for me, it was too little bang for your buck, right? Like, even if you have a successful one, which is not the majority of them, right? The majority of them do not end up being successful. But even if you do, what are you going to make? You're going to make what, like $3,000 a month, $2,000 a month, So, you look at commercial leases, they're for like 3+ years. So you're getting locked into a long-term commercial lease with a low expectancy of profit per month, even if it turns out to be successful. And so I told the guy I wasn't interested. I was just like, nah, man. Also, I already go to a gym, like a BJJ gym, and I'm not trying to compete with them and burn bridges there. I don't really want to burn bridges there either. And so I just kind of had to respectfully decline. And so, it's just there's not enough money. And I love jiu-jitsu. I love MMA. I've trained for a while now. I love it. I genuinely do. I just don't want to take that risk. It's too much risk. Yeah. When you start with 50K, you're drawing on a safe 48K. Yeah. Yeah. Top 3 disclaimers in the world right now, chat. All right. Are you guys green or red today? I haven't traded at all. So no trading for me yet so far. I haven't traded at all. We'll see if it continues, but. Why is Dow futures higher today? Well, the Dow's probably higher because it dropped a lot on Friday. Yeah. The Dow is, if we look at Dow futures, what's the Dow futures? Is this? Yeah, here's the Dow futures. Dow futures are up because they dropped a bunch on Friday. Like, here's the Dow Friday. Almost everything dropped massively on Friday. If you want to understand market sentiment, here's Friday, here's today. You look at the SPY on the middle chart. Again, massive dumps. Here, I'm going to change this so I can put it back up. TOS is weird where if you keep the same symbol up for too long, it starts to like glitch out. But again, here's the SPY. Massive drops Friday, massive rebound today. Here's Nvidia. And Nvidia is really what's been influencing it. Again, Nvidia, massive drops Friday, massive rebounds today. So things are still down, though. I think it's been one of the worst weeks. Let me look this up to make sure this is accurate. I think it's been one of the worst weeks since 2022, if I remember correctly. Let me make sure. All right, so yeah, the stock market dropped Friday. We had the payroll report. A lot of people thought it was weak. The report showed weaker than expected employment data, caused worries in economics and in the economy. It led to broad sell-offs in tech. NASDAQ had its worst week last week since early 2022. And again, people are still uncertain about the Fed decision in a couple weeks. Yeah, John, it's always. So an interesting story about TOS in general, right? So TOS, Thinkorswim, got bought from, so originally TOS was owned, Tom Sosnoff, I believe is his name, right? Let me make sure. Yeah, Tom Sosnoff was the creator of Thinkorswim, right? He's the co-founder of Thinkorswim and Tasty Trade. So he created TOS and then sold it to TD Ameritrade, I think for hundreds of millions of dollars. How much did TD Ameritrade buy TOS for? I think it was hundreds of millions, if I remember correctly. So in January of 2009, TD Ameritrade bought TOS for about $600 million in cash and stock. So they bought Thinkorswim for about $600 million, right? Thinkorswim became one of the largest stock platforms in the world. In October of 2022, TD Ameritrade got bought out for $26 billion. $26 billion by Charles Schwab. Now, Charles Schwab has TD Ameritrade, Thinkorswim, and so now it's bought out. But yeah, point is, TD Ameritrade was bought out in 2009. Or Thinkorswim was bought, over a decade ago, and they haven't done an update on it since, right? So they bought it. They haven't really done many updates. They've done a couple updates, but it's nothing major here. But yeah. What do you think of ASTS is going to do? I don't know, man. Yeah, we're going to be doing our day trading stream, so stick around. We're going to be trading the New York Open. Palantir again getting added to the S&P. Yeah, I don't know much about ASTS here. This is AST Space Mobile. What is this? Explain this to me. Just not super familiar with this company. AST. Yeah. Kind of love Schwab's site. Yeah. All right, guys. SPY up to 544s. Again, Tesla up to 217s. Okay, we got AMD. Again, AMD is down to 132s on Friday. Back up to 136 today. So we kind of rebounded a lot this morning already. It doesn't mean we're going to hold. We'll have to wait and see. But we did rebound a bunch already here. So again, we'll see how that goes. Again, stick around. We are going to be pivoting to... again, we're going to be pivoting to... another day trading stream pretty soon here. No, so it's only day trading, Justin. It's only day trading, brother. All right, again, we're going to be pivoting over to our day trading stream. And so again, don't go anywhere. Literally, as soon as we click end on this stream, I'm going to make sure this is working. But as soon as we click end on this stream, it should immediately pivot you to the day trading stream that we got going on. So don't go anywhere. Again, as soon as we close this stream, it should immediately pivot you to our day trading stream. Again, don't go anywhere. as soon as we click end. If it doesn't, for whatever reason, bring you to the day trading stream, go to this link right here. Again, if it doesn't bring you to the day trading stream, go to this link. All right, there's the day trading stream link. Again, if it doesn't bring you there, go to that one. And yeah, let's get started. All right.